I told you that we look at the COT report and we can derive a bias from it, but why do we trust the COT report? Because everyone talks about the COT report. It is pretty known, not that much known like, I don't know, smart money concepts, but it's still pretty known. But I saw very, very few people exactly knowing why does it make sense to actually look at it. Now, we have three main reasons. The first one is that the reporting level for major currencies, okay, we look at futures data, we will look at this in a minute. The reporting level for major currencies is 400 contracts. So this means that the players, the funds, the hedge funds that are included in the COT report are only big hedge funds, okay, with big players only. Because the standard, for example, Euro FX future contract that is traded on the CME, the Chicago Mercantile Exchange, has a contract size of 125,000 euros. Okay, so if we multiply 125,000 euros for the 400 contracts, that is the minimum threshold to be included in the COT report, we can say that this amounts to 50 million euros. That is something around $58 million. So this is the minimum trade size to be just included in the COT report, to be just one of the many participants. So we can see that actually the persons, the funds, the traders that are inside the report are people that are moving big money. They're not people moving 0.01 lots, they're not people trading with small accounts, but they are actual hedge funds, informed hedge funds deploying billions in the market. The second reason is that the average COT reporting fund, so the average fund that needs to report to the CFTC, has a size of about $560 million. Okay, so COT participants, meaning knowing that the average fund size is 560 million, they have, of course, premium data feeds, they have dedicated research teams, and they make informed decisions, and their decisions are worth billions. So when we see that market participants in the COT report are going long, they're buying Euro, for example, we know that the decision that brought them to make this trade was informed, and they are deploying billions, they are betting billions on the market. So of course they will invest a lot in research and they will do very, very informed trades, okay? The third reason, to talk about the third reason, we have to introduce a concept, the concept of open interest. Basically, the open interest tells you what is the total number of contracts that are still open, so not yet, so positions that have not been closed yet on any given asset, okay? So, for example, if we are the only one trading Euro futures and we open 100 contracts, the open interest is 100. So looking at the open interest, we can know how many contracts overall are open, either buy or sell, okay? Now, the third reason is this. COT data, so the data we can see from the COT report, represents 70 to 90% of total open interest in market. So basically, we can see that where the main trades are leaning, they amount for about 70 to 90% of all the trades opened on that market in that specific week, okay? So this means that we see nearly all the serious money in the market. So those are the three reasons. First one, reporting level. We have only big players. Second one, the average fund has a size of $560 million. So again, big players with research team and informed decisions. And the third one is the open interest. We are basically looking at the general market consensus here. Most of the liquidity that there is in market is reported in the COT.